key is right now, the Fed is in a wait and see mode. And I'm not at all surprised by the fact that they didn't do much today. It's exactly what I expected. There are but a bunch of countervailing forces that they're keeping a watch on, and it could go either way right now. I mean, the key thing is it's all about the COVID. So in terms of where they're sitting right now, if we could have an extremely bad, nightmarish winter where there are lockdowns, economic activity is severely curtailed, and people stop spending because things get so bad. And that's the bad news that we're experiencing right now. It's tragic that it's happening, but that's the way it is. But then, of course, we have the good news on the vaccine. And then the question is going to be, how quickly is the vaccine actually get administered to enough people so we actually can start returning to normal? And when that happens, there could be a lot of good news because there could be a lot of pent-up demand. So both of those go in opposite directions. The other issue is what's going to happen in terms of the federal government in terms of fiscal expansion. I think the Fed does expect that something will be passed, but the question is how much. And again, that's something that I think is really sort of really not going to be a big surprise, but who knows? So at a juncture like this, what you want to do is you just want to relax, wait to see how the data comes in, and then act appropriately when it does come in. But right now, there really is not much new information that should direct them.
So with the key kind of part of this statement that I want to read to you is when they're talking about, how long they're going to continue the current bond buying, which is 80 billion of treasuries, 40 billion in mortgage-backed securities. And they say the Federal Reserve will continue to do so until, quote, substantial further progress has been made towards their maximum employment and price stability goals. Again, we're talking about an unemployment rate that was almost 15% back in April. It's below 7% today, and the Fed's own projections have it 5% in the second half of next year now. So doesn't that count as substantial progress?
The answer is I think there has been progress, that we actually have been experiencing a V-shaped recovery. The unemployment rate was close to 15%, and now it's below 7%. But there's a lot of uncertainty right now. I mean, given what's happened in terms of the pandemic, it's really gotten much worse in the United States. These are very bad numbers we're seeing. We're seeing bigger shutdowns. And in fact, even if a state doesn't shut down, if things are bad, people stop going out. You become much more cautious. I know I am, that things are getting worse even in New York, and we're a little more reluctant. We won't go to a crowded grocery store, for example. So all of that stuff is actually not good news right now, but then there's other sides which are good news. So in a situation like this, you want to wait to see what happens. The real problem is not that we haven't had a V-shaped recovery, we have, but from here right now, we don't know how quickly we're going to be getting back to full employment, which is somewhere in the neighborhood of 4%. So that's really the problem that's facing the Fed at this particular juncture.
Fair enough. I still wonder if there shouldn't be more of a reaction to the changing fundamentals. But understandably, this is a Fed that in the much larger scheme of things wants to focus on not tightening too quickly. I mean, that's the whole point of changing the inflation framework, right?
Exactly. So I think the right way to think of this is, remember, the Fed always has to be forward-looking. So yes, the numbers have been a little bit better in terms of how fast the recovery occurred. That's good news. But on the other hand, the pandemic is now worse in the United States than people expected. And so that could be the bad news. So I think that, again, looking forward, the economy hasn't been hit that hard yet because we're just starting this sort of what we can have as a nightmare winter. And that's exactly what the Fed should be worrying about. And in that kind of context, there's no reason for them to actually deviate from their expansionary policy that they've been pursuing up until recently.
Shepard Smith here. Thanks for watching CNBC on YouTube.